Hey guys, Tony Denaro here. Welcome back to the channel. In today's video, I'm going to be going over with you the latest updates on the Federal Reserve's digital currency, also known as the Cbdc, the central bank digital currency. What is Cbdc? What's it going to be used for? And more importantly, I know a lot of you are asking, when can we expect to see this? Let's get right into the details. Yesterday, May 26, 2022, the House Financial Services Committee hosted a virtual hearing with guest speaker Dr. Lael Brainard. Now, Dr. Brainard, as you might know, is a vice chair of the Board of Governors of the Federal Reserve System. The topic of this hearing was digital assets and the future of finance, examining the benefits and risks of a central bank digital currency. So let's talk exactly about what Dr. Brainard covered with the House Financial Services Committee. So what exactly is a central bank digital currency? Well, many of you are familiar with stable coins as they apply to cryptocurrency. The Cbdc is going to be a crypto coin, a stable coin that is backed by the U.S. Federal Reserve. And I'll put a link to these documents in the video description for you. But just to see the exact definition from the Federal Reserve, Cbdc is generally defined as a digital liability in terms of a balance sheet, liability and assets. It's a digital liability of a central bank that is widely available to the general public. Today in the United States, Federal Reserve notes, or dollar bills as we know them, are the only type of central bank money available to the general public. Like existing forms of money, a Cbdc would enable the general public to make digital payments. As a liability of the Federal Reserve, however, a Cbdc would be the safest digital asset available to the general public with no associated credit or liquidity risk. And in that sense, they're contrasting that to the stable coins that are available out there on the cryptocurrency market today. The Federal Reserve Board has issued a discussion paper that examines the pros and cons of a potential U.S. Cbdc, and as part of this process, we are seeking public feedback on a range of topics related to Cbdc. Now, I will put a link to that discussion paper in the video description as well. However, the comment period is now closed, but it is available for you to read if you'd like to review those comments. If you don't want to be bothered, however, with reading that whole discussion paper, here is a quick summary. It summarizes the current state of the domestic payment system and discusses the different types of digital payment methods and assets that have emerged in recent years, including stablecoins and other cryptocurrencies. It concludes by examining the potential benefits and risks of a Cbdc and identify specific policy considerations. As you know, in today's society, we are conducting a lot of transactions digitally, so why do we need a Cbdc? Consumers and businesses have long held and transferred money in digital forms via bank accounts, online transactions, or payment apps. The forms of money used in those transactions are liabilities of private entities. Again, when we use the word liabilities, we're talking about on a balance sheet, liabilities and assets. The forms of money used in those transactions are liabilities of private entities such as commercial banks. Conversely, a Cbdc would be a liability of a central bank like the Federal Reserve. While a central bank digital currency could provide a safe digital payment option for households and businesses as the payment system continues to evolve and may result in faster payment options between countries, there may also be downsides. Those include how to ensure a Cbdc would preserve monetary and financial stability, as well as complement existing means of payment. Other key policy considerations include how to preserve the privacy of citizens and maintain the ability to combat illicit finance. Over the last year, I've heard a lot of crazy theories about why we might be going to a central bank digital currency, and even people saying that this could be coming in coming days, weeks, or months in the very near future to pay off investors because the U.S. Federal Reserve and the U.S. Treasury is out of money and they need a digital currency to pay investors in case some stock or a couple stocks have a short squeeze. To enable a central bank digital currency, it's going to need not only executive approval, but legislative approval from the U.S. Congress. And this is not something that is going to happen anytime in the near future. Let's hear the words exactly from Lael Brainerd in her testimony yesterday in front of the U.S. House Financial Services Committee.
There are potentially risks to creating a CBDC, depending on the future evolution of the financial system. There are also potentially risks to not having a CBDC. And what is really important is it takes a long time. If, for instance, Congress were to decide that it's very important for the Federal Reserve to issue a central bank digital currency, it could take 5 years to put in place the requisite security features, the design features.
Besides the obvious privacy issues with a central bank digital currency, there are other concerns that the Fed is struggling with and making sure that they completely understand before they rush into implementing something like this. Like, for example, what would be the impact to the U.S. monetary supply, the main tool that the Fed uses to manage the economy? What happens when all that money is out of the banking system in a central bank digital currency? How do banks generate loans, which is their main source of income for survival? Let's listen to Lael Brainerd's thoughts on these topics.
Increasingly through mobile payments apps, we've seen a 10-fold increase of the leading mobile payments app, a 7-fold increase just in the last few years of the second mobile payments app. Those already hold balances largely outside the banking system. Similarly, we've seen those having some implications for cash usage. So I think any future evolution of the financial system with digitalization is going to lead to some diminished use of cash and some diminution of bank deposits, but that's also true for stablecoins. You could see some reduction in bank intermediation and bank deposits there. So I think we want to think holistically about it, and it's very important to think about limits, potential limits on central bank digital currency holdings. Whether to pay interest, that would be another way to make holdings of central bank digital currency really only for payments in ways that wouldn't compete with deposits if, for instance, they didn't pay interest. So there's a variety of ways people have been thinking about designing these so that they wouldn't diminish deposits in the banking system.
So that is two interesting points that she brought up there that they are looking at the Fed. Should they pay interest on holdings of a central bank digital currency? And should they put limits on the amount of central bank digital currency that you can hold? If you have a limit on the amount of CBDC that you can hold, then that by default means that the rest of your money has to be deposited into a bank or some other financial institution. In thinking about potentially putting a limit on the amount of CBDC that you can hold, and by not paying interest on it, they're considering what they can do to protect the existing banking system in the United States. Getting back to the issue of the timeline for implementing a CBDC, is it really going to take 5 years, or can the Fed just, in a couple months, implement a digital currency by statute? I can assure you that in the 3-hour virtual hearing that I listened to, there were a lot of concerns and questions from the congressmen on the Finance Committee about this very issue, and they seem very adamant that they want to have the voting power to implement this. Let's listen to a question on this topic and hear Ms. Brainerd's answer.
That the white paper states that the Federal Reserve does not intend to proceed with issuance of a CBDC without clear support from the executive branch and from Congress, ideally in the form of a specific authorizing law. That is a very loosely worded phrase in my estimation, is that the Federal Reserve does not intend to proceed with the issuance of a CBDC without clear support from the executive branch and Congress, ideally in the form of a specific authorizing law. So could you touch on or confirm that the Fed won't proceed with a CBDC without specific authorizing law from Congress? Or what's the intention?
Yeah, no, I think the intention is just as you described it, that we don't intend to proceed without the support of the executive branch and Congress. And it would be ideal to have authorizing legislation that's specific to this. And it's really as simple as that.
If there wasn't authorization in the form of an authorizing law, which would indicate clear support from Congress. But if there wasn't an authorizing law, would there still be an intention to move forward in some way?
I think we really want to see that support coming both from the executive branch and from Congress.
Sounds like we had a hot mic issue. Someone was trampling over her answer. Let's give her one more chance to say that last sentence one more time.
So I just said that we certainly want the support from the executive branch and Congress before moving forward on actually issuing a digital dollar if the decision were taken to move in that direction.
I picked out one other interesting question from this 3-hour virtual hearing that I thought you guys might be interested in hearing about. And this is from Representative Gottheimer of New Jersey. He has a bill that he has drafted. It's called the Stablecoin Innovation and Protection Act. And it is regarding current existing stablecoins like Tether and USDC. Should they exist? Can they exist in parallel with a central bank digital currency? Representative Gottheimer wants to get his bill enacted to ensure that existing stablecoins have adequate reserves in place to protect consumers. And he asked, Ms. Brainerd, do you think that a CBDC can exist in parallel with these other stablecoins? I'm not going to play it for you because her answer was one word, and that word was yes. Thank you, Representative Gottheimer, for protecting the interest of BlackRock and Circle and making sure that coins like USDC don't get wiped off the map. I wonder if anybody else on the House Finance Committee is worried about the interest of BlackRock and Circle who back USDC. Representative Ted Budd from North Carolina, do you have a question for us?
So here's what I want to know. What's the Fed trying to achieve by issuing a CBDC that the private market hasn't already been able to do? Here's why I ask. It's because when I look at private sector innovations like stablecoins, I already see that many of the claims of CBDCs being achieved by stablecoin providers. For example, like USDC with US dollar coin issued by Circle.
For example, like USDC with US dollar coin issued by Circle.
First of all, there's no decision that's been made. We're really exploring this topic, and there are risks of action, risks of inaction. But the U.S. Federal Reserve uniquely can issue currency that's backed by the full faith in government. Of course, no private entity can do that.
Now, if you stuck around this long, congratulations, because I saved the best question for last, the one that you want the answer to. And we have none other than Representative Tlaib from Michigan with the burning question. Representative Tlaib, take it away.
I know given the reliance of electricity and internet access for a functioning central bank digital currency, many folks are not touching on the impact of climate and really truly believes, the CBDC must take into account severe weather events and climate change impacts.
Any kind of system that's permissioned where you have a central ledger or a central authority like a central bank doesn't require that kind of very energy intensive consensus mechanism because there is a trusted.
So how is it, Vice Chair? So we got these environmental concerns and you're talking about regard to proof of work. So how are we addressing those environmental concerns through the
So any kind of system that would be run by the central bank or where the central bank would be the central authority in terms of who can issue would be like our existing payment system.
Guys, I want to thank you for watching today's recap on the latest news about the central bank digital currency. Just to recap in 30 seconds, in case you skip through any of the video, shame on you. We're looking at up to a 5-year timeline to get the CBDC implemented with approval from both the executive branch and Congress. The Fed's current thinking is that CBDC will not pay an interest rate and that there will be an individual cap of $5,000 worth of CBDC. Both of those measures in place to protect the existing banking system. CBDC will be allowed to coexist in parallel with existing stablecoins currently out there in the crypto market. And since CBDC is issued by a trusted central entity, the U.S. Federal Reserve, we don't have to deal with those nasty proof of work or proof of stake concepts, and all those environmental concerns that you are worried about will not be any worse than our existing system with cash. I am Tony Denaro. I want to thank you for watching. Join me on a live stream Monday through Friday during market hours. Don't forget to buy and hold that subscribe button on your way out the door, and I will see you on the very next video.